welcome on the show. So this is another great panel conversation. So yesterday, there were quite a few questions around the CBDC, right? And in fact, I am particularly looking forward to understanding exactly what you guys have to say with regards to central bank digital currencies and how that can be used as a potential regional payment system. And I'm looking forward to hearing your thoughts from an African perspective, but also around the globe. So with that being said, you know what? The moderator, please take on the stage and drive this panel as I will be watching backstage.
Thanks, John. My name is Kieran Ryan. I am editor at Moneyweb Crypto. I'm just going to quote you very quickly from the Bank of International Settlements report on central bank digital currencies, or CBDCs. Central banks have been providing trusted money to the public for hundreds of years as part of their public policy objectives. Trusted money is a public good. It offers a common unit of account, store of value, and medium of exchange for the sale of goods and services and settlement of financial transactions. Okay, so that is what a CBDC is. We want to dig into this a little bit further. There are some technical, there are some legal, and there's some practical challenges in all of this, particularly if we're going to make this into a payment system that is going to facilitate and lubricate trade around Africa. I'm going to ask the panelists to introduce themselves first of all, starting off with you, Monica.
Thank you. Hello, everybody. My name is Monica Singer. I work for ConsenSys, which is the biggest blockchain company in the world, and we're absolutely passionate about CBDC. Some of you know me because 20-something years ago, I introduced total digital systems to the financial market, replacing the physical share certificates and checks with a digital world. And then I created Straight, the Central Securities Depository, which I ran for 20 years. And then when in 2015, I read Satoshi Nakamoto's paper, I fell in love totally. I fell down the rabbit hole and I said, I'm leaving Straight because I don't think that Straight will survive in the current form. And I don't want to rearrange the chairs in the Titanic. So I was lucky enough to meet Joe Lubin, who owns ConsenSys, and he asked me to work for him. So I worked for him remotely from Cape Town, and I ran the South African and the African desk for ConsenSys, but I'm involved in any project relating to blockchain. So I feel very blessed to do the work that I do, and I'm very happy to be here to talk about one of my favorite topics, which is CBDC. Thank you.
Okay, Michelle Chavunga, could you introduce yourself, please?
Sure. Thank you so much, Sharon. Really lovely to be back, although virtually. Normally, I would be in South Africa this month. I think I've been for the last 3 years, so I'm really missing the sun. I'm sure you guys can tell. I keep telling everyone, I just want the sun and I want some fresh, juices and things. But no, thank you so much. My name is Michelle Chavunga. I am the CEO of Global Policy House. Global Policy House really focuses on evaluating the digital economy around the world. We've been looking at things like blockchain. We've been looking at things like AI, cybersecurity, and our main, core aim really is to help governments, regulators, central banks to navigate the digital economy, to really take advantage of the digital tools that are there to help them in becoming a lot more innovative, and really taking advantage of technology. The other area that we focus on is very much around education. We want everybody to have a better understanding of things like blockchain. We're very, very engaged in the blockchain space. I've been in the sort of crypto space since about 2010. So a big lover of cryptocurrency and Bitcoin and a big champion of decentralization. Our main goal, I think, as a company is also to ensure that across the world that there's a better interoperability and better harmonization around some of these new digital assets and really helping others to navigate the space so that they can take advantage of what's on offer. So I offer a range of advisory services, work with governments a lot, sit on a number of boards, including the African Union's digital working group, where we're exploring the potential of CBDC. And the potential of data and digital assets in the context of the CFTA across the African continent. Thank you.
Thanks very much, Michelle. All right, let's go on to BISHNEN. BISHNEN, could you please introduce yourself?
Hi, Kieran, and all of the viewers at this very exciting conference, which I haven't caught most of it. My name is BISHNEN KUMALO. I work at BankservAfrica as the head of SA Modernization. BankservAfrica is an ACH that is a switch for the South African economy. Currently, what we're doing is working on the rapid payments program, whereby we're facilitating instant payments for the economy. We're hoping to get into the cash space in order to convert some of those flows into digitized format. Our view from a CBDC point of view is that we're an enabler, we're a switch. We would like to participate in we've done a lot of initiatives where we are working on blockchain, and in order to facilitate the flows of cryptocurrency or centrally banked cryptocurrencies currently locally. And also the platform that we're building, we're intending on expanding it across the region. So very excited to be here and to meet all of you. Thank you, Kieran.
Thank you, BISHNEN. Let's see if we can get ADESHINA back again. So I'm going to go back to BISHNEN. In fact, I want to start with you, BISHNEN. Maybe you could start off and tell us what progress has been made at BankservAfrica in testing CBDCs. Tell us a little bit about the project. I imagine there's a lot of moving parts in any transaction chain. And also, who's going to be first to launch a CBDC? There's a few projects quite well advanced. Where do we fit into that whole procedure?
So the work that we're doing at BankServ at the moment is domestically orientated, and we have worked with the South African Reserve Bank in terms of just the ideas around blockchain, doing a little bit of proof of concepts. We're not yet in the stage whereby we are launching a cryptocurrency. Remember, as an ACH, we just facilitate the flows between the various financial institutions, including non-financial institutions, as we go along. So the work that we're doing is to enable an account-based transaction between the various financial institutions that we are looking at, and it's going to be instant. It's going to be enabled with domains and proxies inside the financial institutions that we are partnering with on this journey. We have views around CBDCs, and we have views around regional payment systems, of which we are supporters of. And so when it comes to an initiative or a project, we haven't actually initiated, and besides the pilots that we've run with the South African Reserve Bank. Kieran?
Okay, thank you. Monica, turn to you for a minute. There's been a lot of commentary in this conference around CBDCs and where they fit into the crypto space. Some certainly see it as a hostile intrusion into the crypto sphere, and in a sense, the cryptos were an act of rebellion against the architects of a weak or failing financial system. Maybe you disagree with that, but that was the conceptual framework in which Bitcoin was founded. So tell us, where does this all fit in? Where do CBDCs fit into that ecosphere?
So, you know what? The sad part about crypto is that it's become very tribal, So you've got the Bitcoin maximalists and the Ethereum maximalists, and now they're fighting against CBDCs. It's all rubbish. At the end of the day, we need CBDC. It's key, because the real risk is that private companies will create stable coins, and that the public will move to stable coins outside of the fiat currencies. And that means that the central banks are going to lose the ability to set monetary policy. So not only that, the central banks have an obligation to look after its citizens. Many central banks have not been able to achieve that many people get a banking account. Why? For many reasons. So there's an estimate that over 1 billion people in the world don't have any financial services. This is the chance that central banks can get that right. So once you imagine the world where everybody gets educated into using their own electronic wallet, using their mobile phones, using their CBDCs, and they have choices. So you'll be able to have a little app that you will, with a little finger, you'll be able to swap your CBDC for Bitcoin, for ETH, for all the thousands of currencies that are going to be available in the world. And that is the key. And we mustn't forget that I work for ConsenSys. I can assure you we are tokenizing all the assets, from art to jewelry to, of course, financial instruments. buildings, everything is going to get tokenized. So if you have a tokenized asset, you need a programmable money to pay for this. So it's what we call delivery versus payment. So that can only happen when you have this payment mechanism that goes into a payment rail that is real time. It hasn't got, working hours. It can be done, using your little finger. And therefore, it's imperative for central banks that they have to implement CBDCs at the retail level to enable and educate the public to this new world that we are building in the fourth industrial revolution, that is going to require a payment mechanism that is not the current payment mechanism that uses mainframe, Swift messages, and all these intermediaries. The same type of payment mechanisms you have for cryptocurrencies, you should really be having for the day-to-day payments of a coin that is backed by the central bank. We mustn't forget that the most beautiful thing about CBDCs is that it's a liability on the central bank. What is the big difference? Is that it will take away the risk that we have today, that our deposits are with a commercial bank, the commercial bank goes under, and we have the risk as depositors to lose all that money, especially in countries that there's no deposit insurance. So once more, this is a major revolutionary step for mankind, for the first time, for central banks not to be scared, but to take the lead. But, central banks are so conservative, so that's why we created at ConsenSys a sandbox. And we're saying to the central banks, come and play in the sandbox, come and experience. The sad part is that if I ask the audience, I wish I could see the audience, how many of you have invested in cryptocurrency? Many have never even tried that experience. So if you haven't even experienced what it is to buy and sell currencies across borders, real time, without intermediaries, how are you ever going to truly understand what a CBDC is? So that's why we built this sandbox, and we're saying to the central banks, come and learn and experience this amazing technology that will change everything, and that you can drive it for the benefit of the citizens of the country.
Thank you, Monica. Michelle, turning to you for a minute. Global Policy House, where you work, your policy or your mission is to bridge the digital divide between the haves and the marginalized. Tell us a little bit about that and how CBDCs will assist in that program.
Thank you, Kieran. A fantastic question. I think just to kind of echo a little bit of what's been said already, for us, it's very much about actually what are the relative impacts of these innovations on society. So we are quite concerned about, ensuring that people are not being left behind within sort of this digital transformation. We are all living the digital transformation, whether we like it or not. And it didn't start with just COVID, right? So COVID, yes, has pushed everybody to the edge where we're having no choice but to actually to engage with the digital revolution. But even with the digital revolution, we have to be very careful that we don't leave people behind. And what I mean by that is actually, even when you take the context of Africa, we're in South Africa, or being hosted by Bitcoin events in South Africa, and we look at the continent of Africa. Africa is not one country. Africa is a continent with a vast number of countries, all have different levels of development. All of them have different levels of technological advancement. And what we need to be very careful is actually trying to understand these countries at national level, and what, stages they are at, and how populations are being brought into the digital economy, right? This includes things like skilling up and education and training. That is very, very core to what we do at the Global Policy House. But at the same time, we're also very core in the policy end. So on the policy end is very much about actually what policy frameworks are in place, how governments or central banks and people like that are starting to embrace difference. And embracing difference, I mean by we have a huge digital asset marketplace, growing and expanding vastly. Cryptocurrency as a whole, the market has reached over $1 trillion now, so we cannot necessarily say it's an industry that we just need to ignore. We need to be able to look at the policy elements and the impacts of the policy elements or regulatory elements that come in that impact the crypto space, but also impact the overall digital asset space, of which CBDC falls under. Now, CBDC is a very exciting innovation, right? It's a way for, I think, for central banks to innovate and to digitize. And this is a process that's happening across different sectors, and it's very important because, yes, central bank is giving that liability. The digital currency is going to be backed by the central bank, but the design of that CBDC has to very much take consideration of the implications for the user. So the implications for the everyday person, are they going to adopt that digital currencies? Is that digital currency going to help them to do cross-border trade, to do, interregional trade across the continent? Is that CBDC going to be useful for countries? Is there the right infrastructure, in these countries to enable CBDC to happen? What about offline payments? Are we able to deliver offline payments in rural areas? We talk about Africa. Africa is a huge informal sector. Africa is driven by SMEs. Are those SMEs going to be able to utilize that CBDC to make payments or to interact, right? Massive opportunities there, absolutely, I think, with CBDC, but there's also alternatives. So we have to think about the balance, right? There's other alternatives, and those alternatives cannot be ignored, or we should not look at it as, us versus them. I think for central banks and for governments as well, you have a responsibility to ensure monetary stability, to ensure, policy stability, to ensure economic growth, and same with the private sector. So how can we come together to ensure we're not leaving people behind? We're not necessarily jumping into innovations for the sake of jumping into innovations. What difference is it actually going to make for the economies? And we have to really look at it at granular level at the different countries. And that's what we're doing at Global Policy House, is working with central banks, is working with governments to say, okay, let's analyze the situation. And we have a 3-tier, analysis that we go by, which is very much around discovery. So most of central banks around the world at the moment are in the discovery phase, where they are researching and starting to study the opportunities with their CBDC. Others like China and Sweden, are starting to pilot and are piloting the CBDC, which is the next phase of designing. And then you're looking at the delivery phase, distribution. Can we easily distribute? Is it easily accessible? Is it usually, can you use it quite easily? So there's all these dynamics, I think, that we need to seriously take into consideration before we go and say, okay, go off and implement a CBDC. In the African continent, there are a number of other factors, including the CFTA, right? How does that fit into our policy agenda within the CFTA or Agenda 2063? Is that one currency? Currency is a big issue for the African continent as a whole. Right, there's been a lot of reliance on the sort of external, dollar and the dominance with the dollar, the franc, in the ECOWAS region. How do we innovate around that? Let's not be afraid to innovate. Let's not be afraid to look at alternatives. And for me, it's about let's create choice, different choice. And it's not just about CBDC, but it's about actually understanding the digital asset market space.
Very good. Thank you very much for that, Michelle. ADESHINA, have we got you back?
Yes, I think so.
There we go. Good to hear your voice. ADESHINA, just start off, and we didn't get your introduction. Please do that, and then just explain what is One Kiosk Africa and how CBDCs fit into that.
All right, thank you very much. So One Kiosk basically is a retail tech platform that's actually digitizing how buying and selling, occurs here in Nigeria. We're particularly, concerned about the informal, retail space, where we actually use technology to connect them to online customers. And more particularly, the CBDC, is one key channel that we can actually use to actually drive our goal of driving inclusive commerce as well as financial inclusion in Nigeria and also across Africa and the globe at large. For me, the CBDC, is a very effective channel, that we can actually use to actually drive harmony, cross-border trade, the African, free trade, among various other, options that the amazing speakers here have actually spoken about. But like everybody has said, the concerns are actually, do we have the robust structure to actually, make this to be a massive adoption, or a massive channel that can actually replace cash? Because cash still seems to be something that will be a major, competition of making, the CBDC a successful rollout. Apart from that, we also have the commercial banks. The commercial banks majorly would have to be able to find a way to be able to plug into the CBDC, either with the CBN adopting, a decentralized system, or maybe a system that actually makes them the middlemen to actually verify, adopt the KYC and several other factors. But when we look at it from another angle again, if the central banks actually use, the commercial banks of today, then the issue of, you don't really know who is performing the transaction will no longer be there. The anonymity, will no longer be there, meaning that people would also shy away from using or adopting that particular technology. Also, the issue of, interest would also be an issue whereby the banks can also not make money from these transactions. So there are just a lot of people, a lot of stakeholders who need to be enlightened, who need to be engaged effectively on how can they benefit from adopting CBDC, and also what way should we use to actually drive this inclusiveness for possible adoption. It's very, very key for me, especially here in Nigeria, where our own central bank, where South Africa is still considering, making it illegal, or basically regulating how, cryptocurrency and among others, is being done. But here in Nigeria, we just rolled out a total ban, in February, saying no way. We have South Africa, we have China, we have the US, we have, the European Union, basically everybody looking for ways to actually adopt the CBDC. But here in some part of Africa, we still have some of our regulators actually, taking the back seat. So the question is, how do we get them to actually, be at the front of driving this discussion among various stakeholders? Thank you.
Just a follow-on question from that. The Bank of Nigeria, the government of Nigeria has actually issued a law, I think, that prevents the crypto exchanges from having any interactions with the commercial banks. And you're saying that there's no development happening there on CBDCs either. So there's a hostility generally towards this technology. Is that correct?
Well, that's totally correct. As of today, okay, while I don't know what is happening internally, I believe that, whether or not, they actually agree with it. Cryptocurrency, blockchain technology has come to stay, and it's going to be very effective if the central bank, especially here in Nigeria, actually, open up to the fact that it has come to stay. We have billions and billions of transactions that take place illegally right now here in Nigeria, through these various platforms. So the central bank, or central banks across Africa, central banks across the globe, actually finding a way to actively participate through this digital currency would actually give them leverage to be able to control and also influence the monetary policies across their countries.
Great. BISHNEN, back to you. I just want to touch on some of the rudiments of the monetary system. The existing system has inflation embedded into its DNA, and Bitcoin will only ever have 21 million coins in issue. Now, if you look at the US dollar, that's deflated at an average rate of about 3.4% since the end of the Second World War. The South African rand is deflated by 8% since it came into being in 1961. So inflation is part of the makeup of these fiat currencies. Now, there's an interesting laboratory experiment happening in the Marshall Islands where there are plans to run a CBDC alongside the US dollar. And that experiment, they got 4% inflation built into that particular blockchain protocol. And as far as we know right now, that cannot be altered, which removes it from any kind of political manipulation. You might argue that 4% inflation is too high, but that's nevertheless quite a radical experiment, and it does open the door for other countries to look at similar things. Is this how we take the power to create money away from politicians? We build it into the code, into the computer code that run these CBDC coins.
Well, to be fair, it's fiat cryptocurrencies also experience fluctuations in value. And so, yes, fiat currencies experience inflation. And I know Monica is saying that we need to move away from fiat currencies into an independent asset class, if I'm explaining her explanation properly. But I think that to say that cryptocurrencies, because they were limited to the original denominations, the 21 million that you mentioned, Karen, and that it doesn't experience fluctuations in value as the same as fiat currencies. I would argue that fiat currencies experience fluctuations, and so do cryptocurrencies as well, like centrally banked cryptocurrencies could. The conversation around whether we're taking power away from central governments by creating an independent value is a sound one, but I don't think that central banks are going away anytime soon. I do think that they play a role in stabilizing monetary policy across the region. And so we need to look at, I believe it was Michelle who was saying, there's various different types of digital currencies that we need to enable. There is no one that is, in my opinion, that is superseding the others. We need faster payments in all of the economies that we operate in. We need, as I believe Michelle said, a mechanism of enabling inter-Africa trade across the region, whether we on the back of the AfCFTA and all of those regional initiatives. But the role that central banks are playing, and in terms of monetary policy, in my opinion, is still relevant. The issue in Nigeria around banning cryptocurrencies, and I don't think it's Nigeria alone, there are other countries as well that have banned cryptocurrencies, and those economies have found alternative ways of trading in cryptocurrency. We need to enable all forms of digital currencies, whether we're speaking about cryptocurrencies, whether it's educating central banks around CBDCs and how to look at innovation in order to facilitate and enable the citizens to have access to multiple forms of payments. It's not one or the other, in my opinion. It's enabling all of them. And I don't think necessarily that fiat currencies are more dangerous than cryptocurrencies, or cryptocurrencies are dangerous for the economies in which we operate. Okay.
I'm just there was a presentation yesterday from Nathaniel Luce in Nigeria where he was saying the future is hundreds of thousands of private monies, and you could end up in a situation where you do have, this is actually a threat to the nation state. You do have private monies competing against public monies like CBDCs. It's an interesting debate. I don't think it's going to be resolved. Monica, you look like you're going to just about to jump out of your chair there in answer to this one. And maybe you want to comment on that, whether this is a way that we can actually put politicians on a leash. And the other question I have for you is the adoption rate of CBDCs. It's dependent on another crucial piece of technology, and that is the smartphone. Now, Pew Research shows that 51% of South Africans had smartphones in 2018. It's probably a lot higher now, but other parts of Africa are still very low. So how are we going to get mass adoption when we need all of these pieces on the chain in place?
But it's very easy. I've already been talking to quite a lot of service providers. When there's a way, when there's a need, there's a way. And there's amazing service providers that are coming up with solutions that would not require a smartphone. It's very simple. It doesn't even require for you to learn how to read. It's so simple. I've seen it. The first one is going to be launched in Johannesburg in the taxis. It doesn't require electricity. It doesn't require the internet. And once a day, it charges back into, into the system. So there's QR codes. There's so many other ways that we can do it. So, the only thing that it does require is the commitment by the central bank not to be so scared as to what's going to happen to commercial banks. And the way to do it is that you work with the commercial banks and other service providers. There are many fintechs, there are many service providers, from the retailers, the supermarkets. There's so many that, we're working with all the credit card companies because they all know that credit cards are going to disappear. And therefore, they have to now do the transition into crypto. As you know, PayPal is accepting crypto, Visa, MasterCard, they're all going to transfer into this new world order because you don't need an intermediary. That's what people must understand. This is about the decentralized world of finance, the new idea of money, that you will choose what you want to use. If you want to use your private stablecoin, if you want to use your CBDC, there has to be choices. But I truly believe that this is a chance for the central banks, once again, to take care of the people that they couldn't take care of because opening a bank account is so expensive. Now, with this very simple technology, it really is simple technology to the extent that people won't even know they're using crypto tap technology or blockchain tap technology or programmable money or all the fancy words we use in this industry. People won't know, and it doesn't matter. Like if I tell you today, do you know that the internet is built on this technology called TCP/IP? The answer is no, and who cares? I still know how to use the internet and send an email. The same is going to happen with this. So adoption will happen gradually, but it will really, as I always say, it requires commitment, leadership. And you know what? China is waiting for no one. Okay? They have been working on this for years. And they're going to come to Africa. And they're going to say, if you want to trade with me, you're going to have to use my digital renminbi. So if that's the case, is that what we want to do? We want to allow a different currency to take over in Africa? Or should we in Africa start taking the leadership because this is the best technology to actually create empowerment for all our people? And it doesn't require the internet. So don't look for problems, look for solutions, and the solutions are being developed as we speak. It requires leadership once again.
Okay, well, I do want to focus on a couple of problems that I see. And I'm going to address this to Michelle. What about privacy and safety in CBDCs? I think the concern here that has been raised by a number of people is that if you have something like a CBDC where every purchase that you're making can be tracked and monitored and all that information is being shared with all sorts of government agencies and you don't really know where it ends up, is this a good thing? And should we be concerned about that? And where is citizen sovereignty sit in the middle of that? Michelle, can you address that, please?
Sure, absolutely. This is an interesting, just before I joined, we had our masterclass on CBDC where we really went into a bit of depth around CBDC and what it actually means, right? And you know, it's a mix here because I think at the end of the day, a lot of people will question and say, actually, why do you need a central bank to have that much control? Because if everything is backed by the central bank, does that not mean that, you know, they hold the control? You know, who has control? And that goes to the arguments that you're saying around privacy. Now, privacy is a very, very important area to consider, absolutely fundamental. And I go back to my earlier comments around actually, you know, we have to start back from even the design element. So I talked about the journey in terms of creating or getting to a CBDC, right? There are a number of steps that you have to consider. And I think a lot of, you know, central banks and governments around the world are very much asking themselves this very question about privacy. How do we ensure there's a certain level of privacy? You know, for example, even with cash, there's still a good degree of privacy because that £5 or that $5 or that R5 that I have, you know, you can't necessarily 100% track it back to me, right? You know, there's some elements of privacy, but I think we have to be very, very careful when we're actually thinking about design. So the design elements and how you design your CBDC and what technology, to some of the points that Monica was alluding to, is very, very important. So a lot of us in the DLT space or distributed ledger technology space are very, very familiar with opportunities around security, opportunities around privacy that technology brings. You know, I am not at all advocating that everybody has to go off and use DLT to build their CBDC. You know, sometimes it's not actually necessary, but there are certain benefits that come with a DLT application that helps with things like security, that helps with things like, you know, traceability. You know, traceability, not in the sense of, you know, I'm going to know everything about Michelle's personal details or personal information, No, not necessarily, and it almost kind of gives me control as well. I'm the owner of the data or the owner of that information. I have a lot more control with things like blockchain and DLT to decide, for example, how my data is used. So, for example, when you look at programmable money, which utilizes smart contracts, how you build those smart contracts will determine kind of how that application is used. So, yes, to a certain degree, I can understand why people are very concerned around actually central bank will have a lot of control because everything sits with the central bank. But then the central bank also, remember, is there to protect and to ensure that actually there's monetary stability for everybody, but also to ensure there's a certain level of protections that come with your money, right? So it's very, very important, I think, to have that understanding that even with privacy, it's a concern for the central banks, it's a concern for governments. So they have to work with regulators around coming up with regulation around actually how is data or information used? How do we ensure that the system that people are using, be it for payments or whatever, is secure and it protects the consumer? This is back to my argument earlier on around how we need to just think beyond the tech. It's not so much about the tech. I think the tech, to be honest, is probably one of the easier bits when it comes to CBDC, right? I think the more challenging, again, Monica mentioned this a little bit, the more challenging bit is actually, that consensus with central banks, with governments, with regulators to actually start to understand where are the good bits that we can pull out of DLT or blockchain that we can utilize to make this better and more efficient, more accessible, easy to use, and easy for people to adopt. And then where do we need to look around the policy or the governance element, which again will come in very, very strongly. So what do we need to do around ensuring that there's a certain level of degree and governance? We're not abusing people's privacy. We're not taking advantage by having this CBDC to monitor and watch everything that people are doing. The data systems that are available to us today, again, will play a big part in terms of the design of CBDC. So I think there's a number of areas that we need to have better understanding, especially when it comes to the design element or the architecture that is used. Most central banks are saying they're very tech agnostic, so they're not picking one or the other particular technology, but there are certain benefits, I think, with certain technologies to help with exactly what you've pointed out. And there is, of course, we have to admit, there is to a degree a level of control that the central bank will maintain because they do have access to probably a lot more information. But I don't believe for one second that is something that is an ambition of the central bank, of the governments to control people per se. Right. I think the ambition will remain very much around how do we create competition amongst the market. So different providers, how do we ensure that, we have that monetary stability? But the attack that I would probably have against sort of central banks or governments is actually be open enough to also explore the innovation that is coming from elsewhere. So hence creating that choice that we talked about. Don't go and say, oh no, we're just going to ban cryptocurrency, we're going to ban this and that, because either, there's a lack of understanding of what it has to offer. If I was the central bank or as a government, I'll be like, I really want to know what the heck is going on around that space. What are the good bits? What are the things that we need to fix? What are the regulations that we need to perhaps bring in to protect everybody, including the innovators, right? So there's that kind of debate that has to happen. And that's what we are doing anyway, working with central banks and governments around the world to say, actually, let's look at this properly. Let's evaluate. Let's look at the design. Let's look at the delivery. Let's look at the discovery phases of CBDC.
Can I add one example?
Sure.
Okay, so for example, if you read the digital dollar paper by the US, they are absolutely clear about privacy. And they said, if with cash, we don't ask you for any information on a cash transaction below $10,000, if we create the digital dollar project, we're going to program it. So any transaction below $10,000, we're not going to ask you questions. After that, it makes sense that they should, because we have to prevent, anti-money laundering, blah, blah, blah. So the beautiful thing of programmable money is that you can program the parameters and you can decide to what extent you have privacy, to what extent you don't. The other thing we need to remember is that the model, the ideal model, is the decentralized model, not the centralized model that China has built that they can control absolutely everybody, because that is now infringing on the human rights of individuals to use, payments for whatever they want to use. So they are models, and it depends on the leadership, once again, of the central bank, but it's not a technology issue. The technology is programmable, and privacy is achievable.
Thanks, Monica, for clarifying that. And there was a question or a few questions coming through about that, the privacy issue, and whether this is a public or a private blockchain that it's being built on. BISHNEN, maybe you can just address that point. What is the technology that CBDCs are built on? The private blockchain, public blockchain, how does it go?
Well, it's a difficult question. It depends on the selection of the central banks. Each of the central banks will need to create, I believe it's going to have to be on a private blockchain in order for them to be able to control some of the elements that, in order to stabilize a currency. One of the things with the CBDC is that you're going to have some measure of reserves, so that if there's ever a run in the banks, the central banks have got some monetary value for the currency that is flowing within the economy. It creates an element of control. Yes, I understand that there is an element, there's always a debate in cryptocurrency whether you decentralize it completely or you introduce a level of control, which is what the central bank is able to do. I believe it would have to be, and that would be an engagement that you'd have to have with each central bank. I believe it would have to be in a private blockchain that is accessible to participants. Those participants would need to be vetted in some instances in order to ensure, protection of money laundering and identity, etc. And so the privacy in terms of the blockchain is probably necessary, and that needs to balance between the individual requiring anonymity in order to be able to trade on a currency, as well as the role that the central bank is playing. I think it's two-pronged. And so in a centrally banked currency, cryptocurrency like a CBDC, you need to put in some controls. You need to understand who are the players inside the ecosystem. You need to understand how the govern the rules. And in order to do that, you'd probably create a private blockchain. That's just my opinion.
Okay, thanks for that. ADESHINA, let's turn back to you. I'm quite interested to hear in Nigeria. Nigeria is an interesting laboratory for cryptos at the moment because of this hostility that we've heard about from the government. And you did mention that people are doing all kinds of, I guess, peer-to-peer transactions. So you can buy Bitcoin there. You've got the Luno exchange and you've got Binance, where I guess it's just not that easy to get a hold of the fiat money that you need to acquire these cryptos. So people are developing other ways. What I'm trying to find out from you is, do you think that we're entering an era now where in Nigeria, people will start accepting private monies, that there will be alternative means of payment, basically? And what is the experience so far with all of this hostility from the government?
Thank you very much for that question. So basically, we as humans, we have the ability to always, find a way where, one particular way seems to be blocked. So what has happened over time is, we've seen people, transact, with people who actually have the ability to trade crypto, cross border. So we have people moving money through the same system that seems to be, tight-proof, wiring it even far to Ghana, wiring it far to different parts of the world, just so that they can actually participate actively in cryptocurrency. That is one line that, most people here in Nigeria have decided to adopt. But the truth is this, at least based on the, report that was done, by the International, Bank of International Settlement, over 70% of the central banks actually, voted and said they are in support of digital currencies. I think the issue is about them understanding how to take it forward. And for me, I think, like you asked, have we gotten to a stage whereby, digital currency, crypto, blockchain has come to stay? The answer is yes. Because with or without the approval of the central bank, a lot of informal, unrecorded transactions are going to continue to go on. And I think even for the Bitcoin to have gone as high as over 60,000 and then fluctuate back and forth, it shows that a lot of activities are still going on from Africa to Europe to the US. A lot of activities are still going on. People are still buying, people are still trading. People are not deterred by the fact that they have a regulatory body saying don't trade in BTC. A whole lot of people also have decided also to then open accounts offshore, just to be able to secure, their ability to be able to trade. And then, like the recent policy that says, when they actually send money back home in USD, they get extra money. They then participate in crypto and then send back the money and then wire it back again to participate in crypto. So the cycle continues to roll back and forth. But for me, I think basically for regulators, if some of them are actually on this call, I think basically they need to decide whether they want to work with an account-based channel or maybe a token-based. But like some of the speakers here have mentioned, we need to be able to say, okay, how do we protect privacy? How do we make it efficient and accessible? And I think for me, especially speaking from a retail point of view, whereby I engage steadily with the informal retail pool, which accounts for over 98% of people who actually engage in transactions here in Nigeria. I think basically they are ready to adopt this new digital currency. Our regulators, our central bodies, the central banks across Nigeria, across Africa, and across the globe just need to sit down and say, how can we engage? How can we make people, to actually, believe in us, that we have the ability and capability to actually regulate this digital currency for the betterment of our economy. There's a lot of opportunities out there, which obviously, if I continue to say, will not actually finish today. Thank you.
True enough. Thank you for that. Monica, if I can bring you in here, please. There's a question here, a few questions, so we're going to have fairly quick answers as we get through this. What are the public financial management and anti-corruption implications for CBDC rollout? Okay, that's a good question. And how would this enhance the ability of governments to ensure services to benefit of all citizens? And I think part of that corruption thing is there any potential here for counterfeiting? There's always potential for counterfeiting, right? How does that get protected when in the digital currency age?
Okay, so counterfeiting is more when you have notes and coins. Just think digital. Okay, so yeah, you can. It's difficult if you do it in a blockchain. It's hard to hack because remember the blockchain is not centralized. It's a shared version of the truth. The notes are everywhere. It's very difficult. So try hacking the Bitcoin ecosystem. Nearly impossible.
Yes, but just this is different. Here we're talking about probably a private blockchain.
Even if it's private is even more secure. So no, you think in money. I think that whoever asked the question on counterfeiting is still trying to translate cash to the new world order. If you take the benefit of the blockchain, that's exactly what it's trying to prevent. The mutability of the ledger, the copy of the ledger in so many places, so absolutely complicated to actually change the record, etc., etc. In auditing, you talk about the 4I principle. Here, you're going to have the many I principles to ensure that this doesn't get modified. In terms of the KYC AML, the whole idea that we believe is that you should, as I said before, it's a two-tier process. The liability it gets issued by the central bank. It's a liability on the central bank, but it gets distributed by all these fintechs and banks to the citizens. And they take the responsibility to do the KYC. So, for example, in East Africa, excellent example, you have M-Pesa, you have a mobile phone operator that has a liability on their own balance sheet. And this created this private coin, M-Pesa, that people use, but it's really a liability on a mobile company, on a telco. Just imagine the implications of what we're talking about, and nobody wants to talk about, but that is the implication. And what we're saying to the telcos is that we want to use their current rails of having got the records of every citizen that is using that type of coin to now incorporate the same checks and balances that they have, but in a blockchain environment for a cryptocurrency. Because, as you know, M-Pesa is stuck in that little paradigm of that internet. It's a private permission ecosystem in the balance sheet of the telcos, and that has no ability to integrate for the wider world. And this new world that we're talking about integrates directly into the Internet of Value, integrates to e-commerce, integrates to, I'll give you an example, companies in Europe have come to ConsenSys and said, we need a digital currency because we are already inventing Internet of Things for all our devices. So if your fridge breaks, the fridge will send a message to the company to say the fridge is broken, the parts will be delivered instantaneous, and the cash would be paid because it would be connected to an equivalent type of currency that enables the delivery versus payment. So we mustn't forget the ultimate, which is if all the assets are tokenized, connected to artificial intelligence and IoT, we need the payment to be in the same rails of this digital world that has no banking hours, no intermediaries, and no mainframes and Swift messages. So do you understand how this is a new world order? And the last thing to worry about at this stage is counterfeiting. Yes, security is imperative, but it can be built because that is the essence of the blockchain.
Okay, Michelle, could you come in here? We're talking about a regional payment system, and that might be technically feasible, but what will be the currency of regional trade? Is there going to be a winner? Is there going to be a Google that rules over everybody?
Sure. No, thank you for that. I'll make well, it's not a joke, actually. I think a lot of it's a big institutional player, actually, who I won't name, but who recently said actually the new currency of trade is actually Bitcoin. But and there's some sort of truth around that, because with the innovation actually comes the willingness, I think, for groups to come in and want to take advantage of that innovation. So for me, the currency of trade is certainly going to be anything that is, number one, quite easy to use, and this is talking across intra-Africa trade, or cross-border trade across the world. It has to be easy to use. It has to be not so expensive. It has to be convenient and secure. It has to protect at the same time. So, any of those sort of currencies that you can bug in there and say, actually, I can, work with this, right? If I'm an entrepreneur, or, as ADESHINA was saying, he's in the business of e-commerce. He wants to be able to do business quite fast, cheaply, without the hurdles or, problems around things like customs and borders and problems with that. And that's what the blockchain really is offering, I think, at the end of the day, is actually saying we're giving you a platform or opportunity to do things slightly different, but more efficient, more costly, more, or you can audit it a little bit better. So for me, yes, CBDC has a big role when it comes to trade, for example, right? So when you're thinking about cross-border interactions as a whole, we spoke about this morning with a big bank, who was saying, actually, for us, one of the most exciting things around CBDC is on the wholesale end, right? So that interbank engagement, right, between bank to bank, and ensuring that transactions are, can happen, right? And transactions can happen faster. You talked a little bit around interoperability there. I think interoperability is really, really important. So how do we ensure that these currencies, if Africa decides today, look, we're just going to have one currency in Africa, right? How are we going to ensure that that currency serves Africa really well, not just within Africa, but across borders? Can we be able to do business and trade with China, for example? We're not going to be strangled and say, no, you're going to have to use our digital yuan, or no, you're going to use our franc, no, we're going to use our dollar, you're going to use a digital euro. Interoperability, I think, is very, very important. It's something that a lot of the central banks are grappling with at the moment. And we are right thick into that discussion right now, actually, around interoperability and how you look at ensuring that there's a level of interoperability to ensure you to be able to play at equal level playing field. Very, very important for on the Africa trade debate there. The other really important example that I can give, if you look at remittances, we all know remittances is a big income generator, especially in Africa or emerging markets, right? But it's difficult. Remittances still has some challenges. There's a lot of new players or fintechs are coming in and trying to play around with the remittances space. But even when you start to look at things like CBDC, massive opportunities to look at how we can overhaul remittances, especially kind of on the wholesale side, and look at how do we improve remittances? How do we improve cross-border trade and cross-border interactions? This will also help in terms of actually putting Africa a bit of an advantage, where if you can have your own sort of currency, that you can utilize, yes, amongst the African countries as a whole, but also in terms of strengthening currency and giving that currency independence that I talked about is very, very important. And also will enable us to start to play, I think, at equal level playing field. And we have better control, right, around sort of devaluation, forex issues, a whole range of other things that I think Africa has been grappling with for a very long time. Now, in the context of just generally, again, quickly around trade, trade is every day. We trade all the time. Trade is what brings bread and butter and tea to the tables of our home. E-commerce is soaring across Africa. But there are many barriers that we can overcome by utilizing things like decentralized finance, by utilizing things like CBDC, by utilizing things like cryptocurrency. Yes, we have to have some regulation and protections around some of these new innovations, but we need to get creative and we need to be able, and now is the best time because we have the CFTA that has paved the way in terms of the policy framework in place, that has paved the way for us to come and be creative. We need the governments and regulators to be on board to understand actually, maybe this is not an area that I'm so familiar with or something that we played around with in the past, but how about we bring in the innovators, the fintechs, and we start to work out actually what's best for our economies. If CBDC, makes sense, right, for a Mozambique, for a Nigeria, for a Kenya, right, it has to make sense for that country. It doesn't mean that, okay, because Nigeria or Ghana or South Africa is looking at CBDC, the whole of Africa should be looking at CBDC. We do have to get quite granular and start to understand structurally what's the impact for my country. And this is the kind of work that we're doing at country level with different central banks and different governments to say, actually, let's do the discovery. Let's move from discovery to the design. So what technology, what architecture, what do we need to consider? And then let's look at delivery. Is it really implementable? So at the end of the day, you can design a CBDC, not very difficult, as Monica has actually pointed out, but is it going to be adopted by your people? Do people know how to utilize digital finance? Do you have an aging population? This is something that I'm grappling with here in the UK. We have an aging population. Are they going to adopt? Or most people are familiar with digital or not? Or we have a cash society. Should we be making sure it sits alongside cash, right, and ensure that there's that hybrid? So there's a whole range of things that we need to debate. But when it comes to helping with the real transition around things like trade, around things like cross-border interactions, around interbank settlements, building interbank relationships, massive opportunities, absolutely massive opportunities.
All right, thanks, John. Over to you.
Wow, this has been honestly speaking, an amazing panel, quite engaging and full of energy. CIARAN, you have been an incredible moderator. Really, thank you for your contribution and your questions. Very well thought out. I couldn't be any prouder about seeing you guys really engage and seeing three ladies on the panel and only two guys. Phenomenal to see the upbringing of many women on the blockchain era. Michelle, you have been outstanding. It makes me realize exactly how much what the policy house is quite an important aspect of things when it comes to engaging both with the regulator, with the central banks, with various institutions, taking sort of an educational approach to bridge the gap between technology and what people really need to know. That is phenomenal. Kudos for the work you're doing. Monica, you have been outstanding, and I follow the work of ConsenSys around the world. You guys are really just amazingly great. BISHNEN, fantastic. BankserV, I mean, really, building switches and things like that, and having a great interest with regard to the CBDC and looking into the potential interoperability between various blockchain protocols and how they can actually allow us to do cross-border transactions and effectively engage in trading activities, allowing us, especially that Africa is moving into that whole Africa free trade zone and things like that. It is quite important for us to see how can we easily leverage technology, blockchain, digital currencies, and move into that world whereby we now need to, do these free cross-border transactions. Digital currency is here to start now stepping into the world, and we need to get the regulators really to start doing whatever to come into this space and not hinder progress. Otherwise, we'll leave the DRC. I am from the DRC, guys, and I'm advocating to the world. I'm talking constantly to the regulators out there. I'm like, you know what? You need to leapfrog. You guys are potentially the guys that will open up, the breadth of this economical growth for Africa. And if you don't progress, it seems as if everybody else is suffocating. So it is time for us in the DRC to open up and say, you know what, let's get this on board. Let's get this onboarded. And in Nigeria, kudos to what you guys are doing at ADESHINA in Nigeria. I've been there before, and it's quite amazing. Sometimes I have a feeling that Nigeria, when it comes to blockchain technology, we always tend to believe that South Africa is like sort of a benchmark when it comes to Africa. But when it comes to blockchain technology, guys, you and crypto, you guys are at the forefront, man. So kudos to that. And with that being said, I want to thank you all for being a part of this panel. This was an amazing conversation, amazing discussion.